All right, what is ROI and how do I calculate that? Hi, my name is Jim Fong. I'm a realtor at Urban Nest Realty in Las Vegas, and I help buyers and sellers and investors in this market, all right? So today we're talking about ROI. What numbers do I need to find to calculate this, and then how do I calculate it, all right? So we're gonna go into that, and then at the end, I'll just throw some tips on how to improve your ROI as well too, all right? But let's just jump right into this. ROI, it stands for return on investment, all right? So basically that just means how much money am I going to get in relationship to how much I invested, all right? What was the cost of the investment, right? So, for example, the equation is, for ROI is you put the profit on top and you divide it by the cost of your investment, all right? So let's take a kind of real basic example look at this, all right? So let's say you made a $50,000 investment in something, all right? Let's say your profit on this was $10,000, all right? So what you would do is you just take the 10,000, divide it by the 50,000, and you get 0.2, right? Times that by the 100%, that puts your ROI in a percentage, which is 20% ROI, all right? With that example, that's how that is, all right? I know that was really basic, so let me give you a different example as it relates to real estate, okay? Let's say you bought a house for $500,000, all right? Let's say you put 25% down, because I always recommend that amount, and that is $125,000. That would be your initial investment, all right, or your cost of the investment, all right? So now let's calculate your profit, all right? So with profit, we need to calculate it by taking your income and then subtracting the expenses, all right? So let's just say in this example, your profit would be the rent that you collect. Let's say you get $3,000 a month. That's your income on that, right? And now let's calculate the expense. Let's say your mortgage payment is $2,000, all right? That's in the expense. Let's say the property has an HOA. That's $100 a month. Put that into the expenses. Let's say you're using a property manager. Let's say they charge you $200 a month, all right? That's in your expense, all right? So we add up all the expenses, and in this example, your total expenses are $2,300 a month, all right? Your income's $3,000 minus out the expenses. Your profit on that would be $700 a month, all right? You annualize that, or you times it by 12, and you'll get $8,400, all right? So you take that $8,400, now you divide it by your initial investment of the $125,000, all right? That gives you 0.0672, all right? Times it by 100%, we have 6.72 ROI on this example, all right? So that's just kind of a quick look with like an investment property example, but just some tips for you to get a better ROI or a better return on your investment are maybe focusing on that top line. Get higher rent, right? Buy a house that's in an exclusive area, maybe a great school zone, maybe things like a pool, all right? That's gonna increase your ROI, okay? Another way to improve your ROI is let's reduce our expenses, right? So maybe beware of properties with very high property taxes or very high HOA fees or SIDs and all that kind of stuff like that. That's going to help improve your ROI as well. And then, of course, maybe we can try to reduce our initial investment. You know, don't focus on too high price of properties, right? Because if you buy a lower cost property, your initial investment will be much lower, and that will also improve your return on investment, all right? The final thing is, maybe not focus on things that require too much renovation and repairs, because that also adds to your initial cost or your initial investment, all right? So that's just a quick look at ROI, all right? If you want more information about investing and things like that, check out some of my other videos, right? Thanks for watching.